Financially in Sync at Raymond James and Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, October the 24th, 2025. Let's get started. We will sort off by week here. We got crude oil up at the top here, but you can see here that is in a short, intermediate, long-term downtrend. And again, silver, which has been absolutely roaring, along with gold, which we're going to talk more about, a weak, and some biggest bars against. I'll get to that in a moment. But you can see mostly up trends across the board here for the most part. Stocks bounced a little bit here, and let's get into it. Biggest bar against. This is a concept that, again, to me speaks to volatility. It speaks to the degree of inflection, right? When supply suddenly overwhelms demand and prices that have been rising, especially prices that have been rising very, very strongly, to me, it suggests an overwhelm where investors are no longer willing to pay a higher and higher price. To me, this has worked quite well in terms of understanding volatility and understanding risk management as it relates to portfolio management. So on the left side, we've got the Sprott Physical. That's the TSX version. You can see this is a biggest weekly bar against in progress. Although there is a long stick, this is an unfinished weekly chart to the end of day Thursday. And again, gold prices look to be down about 1.5% as I write this on Friday morning. On the right side, we can see gold stocks, same deal, right? So they have outperformed rather in the last many months, although bigger picture, gold stocks have been very, very weak relative to bullion itself. Either way, we've got the same behavior. In fact, stocks peaked a week earlier, as you can see from that. Let's get compound annual growth rates. These are the compounded rates. So the rate of return every single year if you'd held over those time periods. So again, CAGR, that's a compound annual growth rate. I'm showing the 1, 2, 3, 4, 5, 10-year time frames, sorting by the last year rather, and that is Bitcoin. There's gold up 51.9%, absolutely strong. Bitcoin, again, there sits at 63, and there's the stocks. Pause your video player at any time here. I think there is a fair bit of information. You can see on the long term, here's the 10-year numbers for the TSX. That's the Toronto stock market sitting at 8% versus 12.5% on the US. Bitcoin, this is a weekly chart. Again, for all the noise and narrative in the headlines, and you're talking about price sell-offs and movements and crashes and tops, it's tough to see. This is a weekly chart, looks like an uptrend to me, looks like a pullback actually to a 34-week moving average line in green. I've got the prior pullbacks marked in green circles. At this point, just looks like a pullback to me, nothing more to see. Let's look at Bitcoin mining stocks. We've talked about this ETF many times on this webinar. BitQ, this has gone through, again, a very strong uptrend over the course of the last several years, although there are some deep pullbacks. The last pullback pulled into the April lows in stocks here, down 54.5%. You can now see there's been a rally actually of 156 to the close yesterday, which is very, very significant. So again, lots of volatility. We always want to understand volatility in our portfolios, and we want to understand that volatility and that contribution to the portfolio when we put them together. Market continues to improve here. You can see both the small cap 80 line hit highs now. Sorry, not both, but mid caps improving as well, right? You can see that downtrend is actually broken. Small caps continue to, pretty languish relatively, but that's nothing new. That's been happening for so long, it's barely worth talking about. Let's look at the biggest, again, this is a seasonality. These are the weeks of the year. You can see here by these blue bars, if you take a look at the diamond, this is the week of the year we're in. On the right side, we've got the S&P TSX Composite, Canadian stocks. On the left side, we've got the US. On average, okay, in the US, over the course of the last 75 years, and over the course of the last 45 years, on average, next week is the strongest week of the year, which is the end of October. You may remember there's been a lot of crashes in October. There's been a lot of volatility in September and October. And so from that perspective, as October ends, seasonally, we get into the best time of the year. And again, that'll be interesting to see what happens next week. Again, I want to kind of make you think here a little bit. So on the top left, we've got 5-year Canadian government bond yields. That tends to be very related to mortgages. You can see they bottomed, of course, during COVID, 5.5 years ago, almost 6 years ago, and they have not come down very much. On the bottom left, we have housing prices. That's the year-on-year change in housing prices. We are negative for the first time in about 15 years. That doesn't happen very often, and it's happening. House prices got very expensive, and you could still hear our government yammering about, again, house prices need to come low. But when you look at house prices compared to yields, which is what is happening on the right side of your chart, what if I told you that housing is actually very cheap? In fact, maybe it's too cheap. Just trying to make you think there. Let's look at some all-in-sync pool holdings. These are some of our top holdings here. You can see everything from Tesla, NRG in the utility space, Google in the bottom left, and Broadcom continues to be a dominating semi. A couple of these are, of course, the largest companies in the world, and they are in weekly uptrends. I want to take a closer look at Tesla just because, again, this stock gets so much attention and so much, really negative attention, which I find fascinating. If you take a look here, they announced earnings yesterday or the night before there. And on the left side, we can see the monthly chart. So this is going back, the last 6-7 years. The stock is on the door here of knocking on all-time highs, sitting at 448 to the close yesterday. On a weekly chart, we had talked, a couple months ago about this kind of break up and break out, if you will, on a weekly chart basis. And on the daily chart, I want to focus on that right side here. The reason I want to do that is that was yesterday. That was the reaction to earnings, and the stock actually opened low. So again, candlestick charts. This is the open down here around 420. The stock opened low on earnings. It was down about 3.5%, lots of negative headlines, and then the stock rallied. And by the end of the day, it was 8.5% higher than it opened. So again, that means somebody who sold first thing in the morning was 8.5% worse off. They should have done nothing. You can see the earnings and sales here. So again, we've had there's declining earnings. There's earnings and there's some pretty big revenue numbers. But again, this doesn't exactly look like the double-digit sort of sales earnings ideal situation. But that has nothing to do with it. I mean, this company happens to be working on so many things that go so much beyond cars. Perhaps price is telling us that investors are catching on to this. And so again, I can't emphasize enough, it's so important we step aside from the headlines, we step aside from our own thoughts and biases, and instead we just actually look at the demand and supply, which again, the market is far, far smarter than both of us. Let's look at sector watch. We'll finish off. Energy stocks up on a, they've been weak to say the least, short and intermediate term trend down. There's the gold stocks down at the bottom, down 12.5% for the most part here. And again, in strong uptrends. But again, I talked about those biggest bars against. I hope this has been helpful. Next week, I will actually be in Vancouver. I'm going to the Raymond James National Business Conference. Then I'll be visiting some clients in Rawson and Trail. So again, there'll be no webinar next week. And then I think and I hope that things will slow down and we'll be back to every Friday. Hope this has been helpful. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.